Okay, folks, welcome to the Contrarian Trader. This is Robert Desmond. Before I get to the stocks I covered on Saturday, the Saturday video, it's posted on Stock Twits on my website, thecontrariantrader.com, the best stock picks video. Before I get to the follow-up charts of those calls, let's take a look at the daily chart of the S&P 500. Where is this market going? Well, members knew that today, because I sent out on Saturday and Sunday video commentary to my members, expect a rally on Monday. Why? How did we know that? Well, we knew that there was 2 days of consecutive consolidation at the 164 level on the spiders, the S&P spiders. We spiked higher today on, call me cynical, but leaked data on consumer confidence that was leaked to the futures market early in the morning, well ahead of the 10 o'clock public release, that the consumer confidence numbers were going to be hotter than expected, better than expected. But what the markets couldn't do, they couldn't push the S&P 500 as much as they wanted to, as much as CNBC wanted to. They wanted to push this market above the 169.07 level on the S&P 500, on the spiders. They failed to do it. Now the concern you have to have is, will we put in a lower high? Now, tomorrow morning when you wake up, all you're going to hear about is Tuesday is going to be the possible 20th consecutive up Tuesday in a row. And they'll try to rally the markets once again. Don't expect this market to collapse right away. I don't expect it to do that. But it's beginning to show a lot of chinks in the armor. I put together 2 separate videos for my members on Sunday outlining the charts of the S&P 500, all the subsectors, the IWM, of why we think sooner rather than later this market is going to go into a corrective mode. Did you know that margin debt is the highest since the pre-bubble burst back in 2007? That sets us up for a bloodbath. When those margin calls begin to get called in by the brokers who are heartless bastards, they'll sell your positions right out from underneath you. The selling, when it begins, is going to feed upon itself. Let's take a look at the stocks I mentioned in the best stock picks video on Saturday. First stock, VOLC, Volcano Corporation. This one I've been tracking for the past couple of weeks. Told my members, you got to be long of this stock. If you're not long of this stock right now, it's too late. The trick to contrarian trading is to look for stocks when nobody else wanted them. It first went onto our watch screen back here when the RSI was well below the 20 level. We tracked it through here and watch it now. It's up huge over this bottoming tail here at the 1650 level. If you're looking to buy the stock now, the risk to reward is no longer in your favor. If you're still long of it, put your trailing stop loss order in. Look for resistance at, say, the 1850 level. Just stick by that trailing stop loss order. You'll be fine. Volume was good today. Dun & Bradstreet. This is one that we were bearish on last week with an RSI of above 90. I put this one out there. This one over the weekend, I told members you cannot be short of this any longer. Look at these bottoming tails. They're going to want to spike it. They're going to squeeze the shorts. You woke up on Monday morning, sure enough, they spiked it higher, topping tails on Monday. My opinion may have changed. Now we may be looking to get short of DNB. ADX line, well above the 60 level, very, very overbought, but you need to handle with care. I'll be sending out more commentary to members on Dun & Bradstreet. Next stock, LFL. This is one I profiled. It closed down today, no big deal. We don't have a position in it. What we want to do is we want to continue to see these bottoming tails and look for a good entry point. You need to take a look at your historical support and resistance levels. If you're going to trade a stock like this with an RSI of 16.49 and you don't know where your historical support levels are, you're going to get killed. You need to know where those support levels are, or you're going to get beaten like a baby seal. Take a look at the volume. High volume today, not good. You need to tread carefully with this stock. I mentioned that you might have a rollover in the stochastic I still stand by that. I think we're going to get a double bottom on the slow stochastic. That's when we'll be looking to add to positions. Not until then. SID. This is another little stock that I liked from last week. We held support here. We're still putting in a higher low, consolidating against the $3.40 per share level. I don't like the fact that volume rolled in higher today. I do like the fact that it did close above $3.40. Very, very important. Take note, ultimate oscillator rolling over, making lower highs. Not good. Same thing, slow stochastics. So if you have a decent profit in this, you bought it down here with these bottoming tails, told you to get into it, you may want to look to take some off the table. BTON stores, I mentioned this is extreme overbought stock. We knew it was going to get spiked higher. Sure enough, it did on Monday morning. Now with this topping tail here, RSI at 84, you can look to begin to open up a short position. Lots of shorts involved here. You need to study the short interest, which is what I did with members in the week ahead commentary. If you want that video, take advantage of the 14-day free trial offer. Big down volume today. MACD histogram, starting to level off a little bit. Stamps.com. I was bearish on this one back here. Got a little bit of bullish here. We saw it get rallied higher. I mentioned to members, I still am bearish on this stock. I think we're going to put in a lower high. Monday's price action made my opinion on Stamps.com all the more solid that I do think that we're going to put in a lower high. The only fly in the ointment to my bear thesis is that we had a higher volume day, so we'll see. So we want to see, what I always tell members, the test is always at the top. Will we take out 38.54? If we do, we move to the sidelines and we watch for a better short entry point, or we get long. However, if we think we're going to put in a lower high, well, then it's time to get short of STMP. Okay, next stock, HTR, Brookfield Total Return Fund. This is one that was kind of a difficult short because, you know, when you see a stock that's trading with an RSI of well above 90, you know, it's hard. It's really hard not to short the son of a gun, especially when you see a topping tail like this. However, as I told my members, listen, you need to be careful. The flavor of the day is yield. Funds want yield, and they will pay premiums to get to them. They want to show at the end of the quarter or at the end of the month when they send out their statements that their investors are long of high yielders. So they'll pay a premium. Sure enough, they did if they bought it up here. We got short. We took profits back here on this bottoming tail, made a nice profit because the expectation was that we would rally. We got a small pop on Monday. Looks like there's resistance to 27.50. It'll be interesting to see whether or not it's going to be able to rally above the 27.50 mark. To be honest with you, the risk to reward is no longer in our favor. So I'm not interested in shorting this stock anymore, or this fund, I should say. So it's off our radar screen, but we made a nice profit on it. Again, this is contrarian trading. Nobody wanted to short this stock. We did. We profited. Next stock, iGate Corp, IGTE, the symbol. This is a daily chart. Listen, folks, I was bullish on this trade. I am no longer bullish on it. I think that we're going to have a negative divergence, the 50-day crossing below the 200-day moving average. That is not good. More than likely, at a bare minimum, we're going to come back down and test the $14 per share level. Resistance is at $14.50. Really, what's your upside here? A lot of risk at this point in time. The easy money's been made. Let's back off of this one. It's no longer on our buy watch list for now anyway. Ideally, I like to see it break down below $13.98. Then we'll check out the historical support level on the weekly or monthly chart, and then we'll look to get long of it, as long as we have a good catalyst. Catalyst being good fundamentals or good short interest. Next stock, Skull Candy. I still like it. Good short interest. I don't like the fact that the up volume declined once again on Monday. It did not participate with the overall market. I like it better above $6.10. So right now it's a watch. I'm not aggressive on it at all. Fannie Mae. I have members emailing me on this one. Listen, I know this is one that everybody wants to get short of, and they've been burned so far. I've been fighting it. I struggle with it. Ideally, I would have liked to trade options. It's not optionable at this point in time because institutions are buying it up. Why do I want to trade options on a stock that's only at $4 per share? It's because it defines my risk. I know exactly how much I'm going to lose. So you know that if it was trading options, they would be liquid and I could get out if I needed to, or I could define my maximum risk and let the trade ride and have some fun with it. I mean, how much could the options be? Today it rose 37.37%. What this is telling us is that institutions are buying the stock up. Take a look at the volume, massive, massive volume. You want to get ahead of this and short it? I don't think so. I don't care what the RSI is, because what they can do is trade it sideways, consolidate it. The RSI will be alleviated. You'll be short. Then, bam, you'll wake up one day and it'll be another 37% higher. You don't know what hit you. So be very, very careful with trading stocks to the short side like Fannie Mae. I've concluded they want this company to survive. It's under federal protection. Whatever float is out there is going to get squeezed higher. So be careful. Next stock, VSAT, VSAT. In the week ahead commentary, I mentioned to members that we were consolidating nicely here at the support level. I expected a breakout on Monday. I was kind of surprised that it didn't rally with the markets. So that is a negative, no doubt about it. It did not participate. So, am I ready to short this stock now? No. There's a couple of reasons why. One, you have a bottoming tail. It held support. And they bid it off of that support level. And you might say, well, Bob, it's got an RSI of above 80. Doesn't technical analysis for dummies tell you that you're supposed to short stocks that are above 70? No, that's ridiculous. Never think that way. That's not real technical analysis. Technical analysis is a combination of using price and volume as well as your indicators. And not just a chart on a daily basis, but on an intraday basis, on a weekly basis. What's the short interest? What's your probabilities of success in that trade? So, am I ready to short this stock right now? No way. This RSI can go to 95. We've seen it before. I've showed you two charts already, HTR and Fannie Mae, which Fannie Mae is right now at RSI 95.20, and HRT was above 97 on RSI. So don't let these RSIs fool you. We are in a major parabolic move higher on a stock market that is just irrational. So irrational stocks can go irrationally higher. RSI 83 doesn't impress me. This consolidation phase here does impress me. RSI 83 tells me, you know what? Be careful because you can get moved higher, especially when you know the short interest down here is fairly high and you get squeezed to death. So please be careful. Be careful of these silly rules of thumb. This is not a simple business. You need to use a combination of indicators and price and volume action and different chart periods, as well as divergences. Very, very critical. All right, folks, join the 14-day free trial offer. Look forward to talking to you. Have a great, great trading day tomorrow. I know it's congratulations, the 20th ups Tuesday in a row. Yay! That's what CNBC will be telling you tomorrow. Don't get too excited.